Hey traders, Raghee here with your Friday post-NFP free video from TradeForexFutures.com, and we're going to take a look at a seasonal chart. Now, everybody knows what's happened in this post-NFP environment, a very odd reaction to what is an NFP result that just knocked it out of the park. And what's really interesting is if you look at, they're not technically whisper numbers, but I look at them as whisper numbers because there are those opinions that vary from the forecast. And remember, the NFP forecast was anywhere from most commonly 215 to 216,000. That was the most common forecast you could see before the release. And there were a number of other forecasts that were looking at anywhere as low as 205. I even saw some that are closer to 2. So if anything, the expectations for a weaker potential NFP, and therefore, anything that comes maybe closer to this figure or even above, say 220 to 225, would have been really good. What do we get? Yeah, we got 288, and yet the Dow sunk. The Dow could not get out of its own way, could not put in a higher high. Now, I want to talk about the seasonal chart just for a moment, because sell May and go away is going to get a lot of airplay now because of the way the Dow ultimately reacted to NFP. And it seems that of all the spin that emerged post that 8:30 Eastern release, it was that participation rate that everybody was most freaked out about. The market picks and chooses what it wants to focus on, and that was the focus. I'm not going to question it. I'm just going to realize that that is the psychology. But sell May and go away, I know, has always been something that, come this, it's May now, so obviously we're going to start talking about what's going to happen between May and June. And what's so interesting to me is the fact that if we look at the fact that May could put in a new high before the market goes lower, we haven't put in quite the new high yet. We've been testing highs, right? So I wouldn't say it's an easy call to simply sell May and go away. Not at all. In fact, come June, we could get another retest. But it is a little bit more of a fade scenario. And let me talk about what I mean. So does it make sense to be looking at a ceiling? When I look at the sell May and go away type mindset, I think about, well, where is there a ceiling? Is there somewhere where I could fade? Because this isn't a trend. And even the trend, if you want to think about it as a trend reversal, it's not great because it wanders around so much through the latter part of May and the early part of June. So it's not really a slam dunk in terms of a short sell either. So I think to myself, wow, could we be actually looking at what would be better suited as an overbought and perhaps even oversold when you come into July, when you come into August before the fall move higher, overbought and oversold type environment. So let's jump on over here to the charts and let's pull up the YM futures contract, because that's what I like to trade. And by the way, for those of you that think that some of these futures contracts are kind of out of your wheelhouse when it comes to Forex, I want to tell you that not only should you be at least looking at some of these key futures contracts that I call the 4 Extra, but ideally you could even be trading them. So I've got a free 2-part series that accompanied this email that you have in your inbox right now. It's a 2-part series on what I call myth busting the futures, the commodity futures markets. So you can check that out. I welcome your feedback. So let's get back to this daily time frame and talk about how this sell May and go away, or what I think is really a more accurate way to look at the seasonals, which is, are we at an overbought level in the Dow? And when you look at the current angle of the wave, it's at best a shallow 12 to 2. At best, a shallow look. If you're looking at a shallow 12 to 2, you can actually even consider entertaining the idea of a 2 to 4 o'clock wave. And what's the difference? That makes all the difference in the world. It makes a difference between my expecting higher highs and higher lows and looking at a market that's going to top out. And when you consider the series of highs along the all-time high barrier, if you will, notice that the 2 to 4 o'clock coupled with these previous highs, and then now take a look at our stochastic, this overbought stochastic, looks like this is a market that really doesn't want any part of price action north of the 16.5 level. Again, this is the front month, the June contract of the Dow. So I'm looking more at this market as a potential fade. You know, I know a lot of traders are waiting for those new highs. I would love to see new highs here. But as long as the market is unable to break higher, I'm really looking at this area as a potential fade. And then I couple that up with the secondary filter, which is that slow stow. So if this is what we're actually going to see, and the seasonals do tend to suggest that even if we do punch to a new high, it's really going to be more of a rope-a-dope scenario, and that this is really just one more chance to sell into a distribution fade type environment. Look at essentially what would be an overbought market. I like looking at the sell May and go away, I think more specifically and more accurately as an overbought, which is exactly what we're seeing on the daily as an overbought scenario. So 2 to 4 o'clock, and again, a shallow wave, overbought stochastic, these tops along the Dow that continue to be where the bulls are being reeled in, or the bears just kind of are willing to sell into even strength. I think this is really the reality for what we're looking at going into summer. So I want to share this with you all. And in the premium video, we're going to take this analysis, this Dow analysis, and move that into what that means about how we're going to view the yen. Because don't forget, what the Dow does, it's going to affect the Nikkei, and we could see then some of these yen pairs react to what could be this overbought scenario in the Dow.